challenges with network today. Right, so that's financial management. Saka imimi muri kutarisirwa kunzi mukwanise kumanage ma resources both from historical here I mean kubva pakuita accounting kutarisa zvakatoitika and say ndiani anoti owe mari and what transaction took place dzakalead kuti ati owe that as a data. Who do we owe money? How much is sitting in our bank account, and can we reconcile and tell how we go to that position where we have such an amount in the bank, right? That's historical. Then looking into the future to say this amount of money at Tinayo today, how are we going to allocate it? How are we going to use it? Then looking into the future with this money, do financial management. So as you know, accounting focuses on the day-to-day flow of money in and out of the organization. So accounting by nature is historical. Tiriku reporter on what has happened already. We are saying the first thing is a customer walks in and buy. Then we record that in accounting after the purchase. And we make a payment for maybe an asset. We're buying a new car or cars, our line managers, our accountants, finance managers and staff. Then we purchase the car first and then record. We purchase the car and then record the transaction. Please, may you make sure that your mic yaka mute. Right, thank you. Right, so accounting is historical. Accounting is historical. It focuses on the day-to-day flow of money in and out of the organization or company. On the other hand, finance or financial management looks into the future. It focuses on the future of the organization. So the main difference here is accounting. So you are dealing with real number, correct real numbers that already. Unlike finance, you dealing with assumptions. You make certain assumptions as you look into the future. You are prophesying. Maybe you are prophesying. You are saying, I'm expecting to get 20,000 in sales after 1 year or in the next 1 month. You are saying, if I invest per stock exchange in Econet, I'm most likely going to get a return or a profit on the investment in that particular company, then Tichawana my returns are most likely a cut. So before you make any decision, you are going to draw certain assumptions and say, most likely this is what is going to happen based on the historical information available from the accountant or the accounting work. Then, because munotora marie basa mukai investor kuri wrong, right? My brother Lonesome, you have got a question. Please come and mute your mic and talk to me. All right, I think I don't know what happened. It's okay. Right, so munotora marie company. Mopio 1 million and the company trusts you, the CEO who trusts in Mariaka in trust corner my shareholders. Moba my investor mari mo a very wrong business. Can out mondo create mari ku benki muchida kuita certain project only to realize my interest charges are going to higher than the return you are going to get. I tell you, muno create a blunder no kondresa kuti murwiwe muma board meetings. So to do that, you are supposed to be a well-trained. What? Confirm you can hear me?
Yes, sir.
Okay, thank you. I don't know what's happening with my network this side, so forgive me.
Yes, sir.
Okay, right, wonderful. So whilst we are there, you are going to make such decisions. So Can you take these notes and say financial management function? Financial management function involves making correct decisions about raising capital. Financial management function involves making correct decisions about raising capital, investing in projects, etc. So it involves kuti mimi tine excess, we are liquid enough and have excess funds available. Atiko si mari yakangorara bank. So you want, as the finance manager or the finance team leader, you are going to recommend that that man is invested. Or you can say, no, mari yedu tida kuita ma projects mamwe. Tine mukana yokwasa kuita ma projects, but we don't have enough funding. So we want to fund those projects. Maybe how do we raise the capital? Do we need to go public and to list a company or the stock exchange, or do we need to simply raise a loan date, or how Twitter say? And you are supposed to be able to justify with numbers and formulas that to give to say, how did you reach to the decision to say, let's go public to raise capital, or no, let's not go public, rather let's raise capital by date or whatever the case might be. Excellent. So more mandipo imimi chanundu verengerawo mu start back menu zvakati one day nema handouts and chikupai. Right. More manditi another point. Excel provides many important formulas. Excel provides many important formulas needed for capital budgeting and cost of capital, needed for capital budgeting and cost of capital models. Excel provides many important formulas needed for capital budgeting and cost of capital models. So capital budgeting, do ma formulas that we call them capital budgeting because to capital yatinayo to raise the capital or to go and to invest, to make a decision to invest, whether to say Maria Tina to badra to lisa in asset a building tondo chaga nzimbo yekulisa to chenga building yacho. Chiri better buy or lease. Because mukutasa tikapota tibadra $100 per month, ziri nani to chengeteza than to pay the 1 million that we have in buying a building or a machinery. Zviri nani kunotora machinery ya someone topota tumpa rental ile toita wentie, then we take our 1 million tondo invest into another business. That's what finance managers are for. Making such decisions. And also cost of capital models or formulas are coming in to tell us tikawana loan ku bank ye 5 million or ye 1 billion. What's the cost of servicing that particular loan as compared to tikaenda public to tengesa edu company edu to taga ma shareholders anobhadhara ma share capital and atina that obligation yekuzobhadhara interest. It's good to opatawaniro profit we declare dividend. You're making such decision, but at the expense of you losing the right or certain right here ownership in the company, giving it away just to get capital. So you are doing cost of capital analysis and come up and say, we want to invest in this particular project. No, we should invest in this one. We want to raise capital. Raise a capital kunongo mnasunza ndikureva kutsvaga mari yekufanda business. Capital ya munotsvaga ya mchiti ndaringotsvaga chete capital. Start, right? Start. Ya munoti start ya. Ndikutsvaga start yekuti ndikangowana start chete kana pakaita munhu anongondipa 1000 start. Ndotanga kuenda ku South Africa ndichindohodha hembe dzangu ndichiuya ndakanzwa kuti Zambia kuri kwanikwa hembe dzakanaka ma t-shirts. Ovauya ndobva ndaita munomutani hanzi that person anonza zvinhu from outside the country achipinza munomutani zita rake zviya. Muneka zita kamunomupa anonzi Rana. Mondikangowana start. I'll become a runner ndichiudza zvinhu ndichisupply kuma shops. Start iyoyo ndo yatiri kuti before my chaga tiri kuti muchaipiwa natete vachikuchajai mari at the expense of your relationship. That's the cost of capital. Mangwana mukatadza kuwadzosera muchazoonani. or muchandoipiwa kubank at a cost of interest iri too heavy, matacha imba yenyu mangwana inogona kutorwa. So you're looking at all those factors because ramangwana hariskanwa, you don't know kuti zvichabudirira here kana zvibudirire. So kusaziva ikoko kubudirira nezvisabudirira, that's what we call financial management. All right, these are another statement. These include, so the many important formulas that we need for capital budgeting and costs of capital models include the net present value. Net present value. Don't worry, kana mamsina kuita finance kuchikoro. Most of you here I know makazviita. Vasina kuzviita, don't worry. Ndiri kukutora it through slowly, not a problem. Net present value, NPV. Number 2, internal rate of return. Internal rate of return, IRR. Another one, payback period. Payback period. Another one, present and future value. Present and future value of annuities. Present and future value of annuities, ETC. Another point you say, besides the financial formulas, besides the above financial formulas in Excel, we also get other formulas like, other accounting related formulas like depreciation formulas. Depreciation formulas. Say depreciation itaisa apa. Depreciation is not a fact equal accounting. Those are not for tax. Kanamaku computer tax, pamchaita tax next semester. Depreciation it's not an allowable deduction. Nekuti depreciation is based on assumption like the finance formulas. You are assuming hachizi chokwadi kuti mukatenga asset 50,000. Pamunoti tiri depreciate on straight line method and the asset life is 5 years, the residual value is $500, and those are simply assumptions. It's not a truth. Kangani pamuno depreciate asset only to realize after 5 years kuti mota yacho yamaka depreciate ichiri kutofamba zvakanaka. Yakachatonaka, yakabatwa zvakanaka. So wear and tear is not determined by assumption. It's a reality of saying ichange chishandiswa nani chishanda sei. Munogona to make an assumption that asset ichararama for 10 years, then you depreciate it on a straight line method. In 10 years, you divide its cost by 10 years. Then you get a depreciation. But after 10 years, you realize that you're going to find 3 years because motor I'm going to roll it when 3 days na someone. So those are assumptions. So because of that, we are going to incorporate these formulas, the depreciation, as you compute your asset register numbers. Pamunema kuita depreciation at the end of year ku QuickBooks kwenyu ku pastel kwenyu mchi formulate ma financial reports ku financial reporting. We want Excel kuti izoshandiswe these formulas mozo zishandisa. All right, wonderful. Allow me to start. So let's have a look at each of them. Number 1, net present value. Net present value. That's the first one. We're going to look at the net present value. Right, can you take these notes? Net NPV, you can shorten it and call it NPV. NPV calculates the net present value of cash flows. Calculates the net present value of cash flows based on a discount rate. Based on a discount rate. So Sister Lillian, what I mean here is net present value. Trikuti muka funga imimi kuenda ku South Africa kundo ku Mozambique kundo hoda mabero moita zvikuitwa nevanhu vachidhambisa mabero paborder tiza kubhadhara mutero. Then mapinza mabero enyu are worth maybe $500. You have invested 500. Ndokunonzi kuinvesta. Mukanzwa kunonzi vanhu vachiti ndakainvesta ndokuinvesta iko. Kana mato pinza mari yenyu business, that's an investment for a return. The whole purpose yekutenga mabhero is not because munofarira kufamba muchitengesera vanhu majackets nezvimwe zvakadaro. It's because you want the results of selling those jackets, which is the fruit of that particular investment. Anditika. So mukandotengesa mabhero muri kutarisira kuti ndikatenga mabhero 500 ndichawana 1000 or 1500. Handiti muZimbabwe mukatenga zvinhu munoisa markup ema 200%, 300%. Right, excellent. So muri expect to get 1500. So but isusu tiri kuti you are actually expecting to get that in a month. Munogona ngoudzana makagara muchinwa tea natete venyu mavati ukangondohodha mabhero in 3 months ukatanga uine capital yako ye500 in 3 months unenge watone 1000. Hawa vanhu vari kuita mari unenge wane $1000. Ndizvo zvoka. Is it a truth because tete ndo zvavataura nekuti muri kunwa coffee iri kunaka? It might not be true. You get it? Because you are prophesying. Muri kuprofita zvichaitika. Pane mafactors amusina kutarisa kuti exchange rate inogona kuchinja. Mutemo wemunyika unogona kuchinja kusvika ma-US achabvumidzwa munhu wese $0 budget rakatiwa last week iro let's hope makariverenga. Rinogona kuuya rine ma-effects are different. Panogona kusizwa paborder ma-interest rate akakwira duty rikakwira paborder and to try and discourage you to import mabhero. Or kunogona kungoiswa mutemo wekuti mabhero achabvumidzwa. Imi muri muprocess matokwereta $500. So you need to look at all those macro and micro economic factors and actually incorporate them in your decision making. So to do that, we are saying, ndichawana ndikainvesta 500. In 3 months, I'm going to get a return of another 500. Then plus the capital yandakaisa 500, then I'll get 1000. Mari yangu ichange ya 1000 in 3 months. Then istobva takubvunza isusu manje tiri finance manager tokubvunza kuti can you tell me kuti 1000 year 3 months from now is not the same as the 1000 year $1000 today. Ndikakupai 1000 nhasi nekukupai 1000 in 3 months. It's better off to get 1000 today. You are guaranteed its value will be locked at $1000. The same amount in 3 months inogona kunge yaerodwa neinflation. Zvinhu zvamunaitenga nayo today munogona musasatenge nayo in 3 months. Changes can take place in the market or in the economy. Right, so as a result, we want to determine how much that money is in 3 months today. Then to know what we call a discount factor. A discount factor. We want to discount the 1000 in 3 months. Kutiti imari today, looking into other factors. Right, a good example, let's say my exchange rate or my interest rates are clear or inflation ya chinja. Then only to realize the monetary policy ya vamangunja ya kutaura kuti my interest rate move from 12% maybe to 16% per annum. Such a change is a macro and you don't have control over such changes. There's nothing you can do about macro related factors. So it means it will affect kana ma-interest rate akakwira ana-affect ma-prices, ana-affect a lot of things in the market. Meaning to say, the buying power of your 1000 in 3 months will be eroded down, maybe to mean tinenge takukwanisa kutenga zvinhu zvatinokwanisa kutenga $920 today. So based on facts like the interest rates, the inflation, exchange rates, and etc., we determine a discount factor to say we are going to discount mari change chipinda yatinodaidza zita rekuti cash inflows. Mari iri kupinda kana takutengesa mabhero, we call it cash inflow. Then we say in the first month we are going to discount at 12% is the discount factor times the number of the period to say we are in the year 1. 12% in the year 1 of that amount, which is maybe in the month 1, we're getting $200. So the $200 discounted in one period with a 12% discount factor, maybe the $200 will be drawn down to maybe $170. It's no longer $200. In the year 2, the same 200, if you're going to get $200 in the month 2, in second month, Then the second month, you realize tika discounter in 2 periods because time value of money, the more number of months we are going, it means the discount factor eroda more money, more value. So instead of actually losing $12 in present value, tinogona Mario in 2 months later, yato instead of 170, yato $150. I see stombori 170, yato $150. Going down into year 3 or month 3, inogononga ya 120, $200 ya 120. So giving us an effective figure of say 100, maybe instead of $600, $200 per month, we're going to be taking in maybe that $600, inogononga ya $490. So this is what this formula means, right? Take these notes. Take these notes. NPV is used in the capital budgeting. NPV is used in capital budgeting to analyze the profitability of a project. To analyze the profitability of a project or an investment. To analyze the profitability of an investment of a project. So that is also project investment yedu mabhero. Toda analyze kuti tinowana profit here in reality. And it is calculated by taking the difference between the present value of cash flows, cash inflows, and the present value of outflows for a period. It is calculated by taking the difference between the present value of cash inflows and the present value of cash outflows. So Maria taka investor to cash outflow, but takabuditsa mari chinotenga mabhero. So we call that money cash outflow. Then Maria takuana, we call it cash inflow. So difference iripo pakati pe Maria takabuditsa ne Maria takazowana asiyawe discounted ndo yatinoti NPV. More mandate another point, how to use NPV formula in Excel. How to use the NPV formula in Excel. Step number 1, the formula is, right, so the formula is equals. So you're going to have, so this is what you're going to do. You are going to list the cash outflow and the cash inflows. You are expecting to muchabudi is at 1,000. Mova mati mumwedzi wekutanga from Mariata investor tichindotanga kuita business rema computers. Number 2 tichawana ma sales edu achaita 300. Mu month number 2 toita ma sales 340. Mu month number 3 toita ma sales 400. Month number 5 total sales 450. So we're going to have a period of 5 months. So we're going to list the cash at Chabudita we call cash outflow, and the cash that we're going to receive in sales, which is cash inflow. You are going to list that. After listing that, then you discover or determine the discount factor which you are going to get from the economic factors that are examples. Then you're going to conclude to say, and also you're looking at the market trend and industry trends to say industry what is the discount factor nature of business really. Nekuti matengerwa anoitwa mota haaziriwo vanhu vari business rekutengesa mota. The rate at which they sell motor is not the same as the rate at which vanhu vari mugrocery industry munhu ari kuventure into grocery business. So each industry in its own standards. So as a result, you are also going to determine that information is readily available everywhere. So you have that discount factor, maybe the discount factor, annual discount factor, maybe it's 100, or I mean it's 20%, 12%, 2%, whatever. So you get that. Then you put this formula equals discount equals NPV, net present value. NPV means net present value. Then you go opening brackets. Then discount rate, opening bracket, more net discount rate. So you determine the discount rate. discount rate. Then Mohamati Mimi inflows Maria Muchawana from that particular investment. In simple terms, my sales are Muchawana from that particular business or project Rama venture into. So NPV equals NPV opening brackets, discount rate, comma, inflows, closing bracket, plus outflows. I will explain why. So mukadaro, Shamaita imimi maenda kundoti visira orime zifomula riaria ramaiwana riaria. Daenda ndine time daenda pa internet ndakugooglira imwe zifomula riaria taishanza kuchikoro riaria 1 divided by rate times muri pa calculator, but kubasa avachakupai calculator manje. Kubasa vanongokupai computer in Excel. And you are also required to use that particular computer to determine the internal the net present value of a potential project or investment. Apana calculator ya maishani some exam muchidikitira ya that you don't get that one. All you get is a computer. So maakufana kumigrate to actually be able to use the computer, and the computer is far more easier, very simple. You agree with me that ever since we started with Excel, most of you agree with it was not because it was only because no one ever told you that. But otherwise, to look up, it's a very good function. Yakakosha yamuno need on a day-to-day. But the reason why Mamska is only because nobody told you. But otherwise, it's very simple formula and the function, but though very important. You get it. So the Excel yakapusa, Excel functions yakapusa no one module yakapusa singaiti. But vanhu vanenge vakaumeni vachinoshandisana nemacalculator rara vachidhoma formula. You don't need all that. So come with me. I've got 3 projects dzandagara ndakugadzirirai. Ndiri kufunga inini kubasa kwedu kuti tida kuinvest some 50,000. We have got 50,000 yatakawana. You remember I'm a war vet saka takapiwa ma 50,000 muna 2,000 paya. So ma 50,000 yapataka apiwa wamwe pawaindonwa doro indakafunga no indoda kupinda business ne 50,000 yangu yandakawana. So but right, so my 50,000 yandakapiwa anditika as a war vet ndakafunga kuti noda kuinvesta in business saka vapazoita mukoma nawo yakauya akati no ndaro msati mainvesta mari yenyu miyaiti tange tatarisa kuti business iri viable rinozokupai return yakanaka kuti business yenyu rikure ndeipi. Ndikatoita sei munin'ina zvikanzi toshandisa capital budgeting and tools akafanana na NPV ndikati itatione. So bandati nini potentially zvikanzi munoda kuita business rei ndikati da kuita transport business. Ndoda kutenga mota dzemushika-shika kana makombi. Time iyo yanga sati arambidzwa zvawo. Then vapazoita project number 2 vandati kana iroro risingaite ndoda kutanga kuvhura ma-tuck shop grocery business. Toda kupa competition to okay tiende kuma-tuck shop mutown ndichitengesa sugar and the like. Kana zvikanetsa forex yanga ichironetsa ndoda kuita forex dealer. Ndoda kutanga kutengesa forex anditika. Right. So these are the 3 businesses that are kutarisa kuti topinda business ripi. Then tichinvesta mari yedu vatati susu toda kuona return yachawana in 5 years. Kuti tinenge taane mari after 5 years. Ndizvo zvoka. So brother Lonesome, we are saying atisi kuda kuti mungopatike mapinda business based on hearsay and social media. Oh shamari, zvakati zviri kubhadhara. It's okay if you are just a dealer and you call yourselves what? Indigenous businesses, whatever you call it. Those are such words because entrepreneurship mindset. Most like indigenous, you do things abruptly and you make wrong decisions. You don't have a business that grows. So if you want to invest in a business or any investment or project, don't just say ndakaona pa next door chichengeta vakatanga ne100 inezvo vakutochengeta 300. No, you need to put some numbers in Excel and determine if most likely you are going to get the profit. And right, let's go. So we've got project A. Let's find out this project E mu year 1 pakatanga year 1 capital invested in the project, which we call outflow. Do not cash outflow. Cash yaibuda from us tichitondopa someone tichitenga makombi tichabudisa mari yese totenga makombi tosara tisina mari. So it's in negative. As you can see, this figure is in negative, right? To suggest cash outflow. Right. And in the year one, end of year one, we are going to get 10,000. Wakomana tikawapa manoa edu ayaya nema wish vakamhanya nao vachiti rare marondera vanotipa 10,000 tinowana masales 10,000 year one. Then year two vanhu vanenge vakutiziya kamushikashika kedu kanenge ane mbiri kakuzikanwa vachitoita kekumirira. We expect my sales to improve to 15,000. Tobatazowana my sales at 20,000 in year 3. Tobatazowana my sales at 25,000 in year 4. So ndika highlight panapa, you realize my sales edu achasvika pa 70,000. And itikati susu 25,000 plus 20,000, that's 45,000, plus 15,000, that's 60,000, plus 10,000, that's 70,000. So tichawana 70,000 in sales. Kana taita ma sales 70,000 minus the 50,000 cost of sale. Maria takabuditsa tichinotenga makombi. Kana kuri ku accounts tongoti ngatimbosiya hedu zvema capital nemachichi. Mari yacho yatandotenga ma stocks or anything chatigasa mari, we call it a cost of sale. So tinowana accounting profits. Do inonyanya shanza nono wakawanda ka. Tikati susu this 70,000 minus income minus cost of sale 50,000, tinowana gross profit here. Tinowana gross profit at 50,000. And based on this, tinogona kuagree kuti business rinobhadhara. Kutenga mushika kunobhadhara. Nekuti hatina kuisa mamwe ma-factors akawanda into play to find out and prophesy. Chiprofita chedu chinogona kuti nyepera ipapa. Are we together? So this is what we call accounting profit. Accounting profits murungoti ndikatanga business ne 50,000. Ndikazotengesa zvinhu zvacho kana kuti ndikazofamba nemota yacho ndichawana mari, ndichawana 70,000. 70,000 minus mari yandakashandisa ndichawana profit at 20,000. Mobva mamhanya kunotenga mawish based on that. That's wrong. This we call it accounting profit, which is accounting. It's historic. Inotaura zvinhu zvakatoitika. Izvi hazvina kuitika. If you are planning to do this and look into 4 years later and say business rangu richandidzosera mari zvakadii 4 years later. Are we together? So to do that, we are going to come up with a discount factor. Kana muri me exam in real life, me exam unongopiwa the discount factor, don't worry. And in real life, you determine the discount factor together with others. Ndakupa example kuti munotarisa ma budgets machi mutarisa discount factor yedu yokudiscount na cash flows yedu. Then you are saying I want to determine the finance profit. The net present value, in other words, we can call it finance profit. We have got an accounting profit which looks into the past, but finance profit, e-profit, and are looking into the future. So you come in here and say, and you put your formula here to determine the finance profit or the net present value. So, Maria said, 70,000 E. Tika visa 50,000 yatakaita 20,000 E. How much is this 20,000 today? So let's come here and so this is our formula equals NPV opening bracket. So that pick at this particular discount rate C10, 10 where do you see C10 comma then C5 to C8. C5 musazoita mistake yekundo pick a C the cash outflow. You are discounting because C10 are good discounter my cash inflows only. Cash inflows only. We are discounting the cash inflows only. I remember most of you remember that pamamu kuchikoro my discounter my cash inflows. Nekuti Maria tabuditsa yatakabata today, if you discount it with a 0 discount factor, it should come back to the same figure, 50,000. So we don't discount Maria takabata. Are we together? So then tozoti isusu kana tadaro, what we get is the value of the inflows yatanga tichiti. So let me do it. So tikuti panapa toda kuona net present value yedu. We are going to say equals NPV, opening bracket, discount rate, comma, we are going to discount the inflows, which are the positives only. Aya Maria chawana ma sales edu ndo ataka ku discount. Tova tati closing bracket. Don't go to enter. I'm going to say enter. You realize kuti iyama muchiti 70,000. Now it got 25,000 plus 15,000, that makes it 40,000 plus 20,000, that makes it 60,000 plus 10,000, that's 70,000. This 70,000, it has been discounted at a rate of 13% discount rate to 49,000. Maria 49,000. If we are going to say 49,000, yachawana in 5 years, and after discounting, minus Maria taka investor, tika visa pa 49,000, because chawana 49,000, taka investor 50. Mova mati plus, pa formula edu pala pa moti plus, kuti muone profit. Moti plus, because it's a negative, those are 30 plus. And if you want to subtract plus minus, then it will then minus. Plus this one, plus the cash inflow. Then moti enter. You realize that the project ya murufunga by 20,000. In actual effects, mukavunza deke andokuuza kuti muchatoita loss ye $209.27 after 5 years. Ndo papa munozofunga kuti I think pana sekuru ari kuti roya business hangu arisi kufamba ndakanga ndine 50,000 andiboziya kuti yakafamba sei. Mozongoti afarova panofa sekuru wenyu wanga ine shop yawo isina kunyatso management mushe. Mongoti apa wakangofa zvakabva zvaenda nesekuru athinga vanga vakaromba. It's true vanogona vakaromba, but I don't think ndo kune nyaya. Pamwe pacho it's because hazvisi kunyatso management zvakanaka. Are we together? So atirambe kutofana kupindawo tiri ma risk takers. But at the same time, whilst we are risk takers, high risk, high return. Tinofana unge also tichi consider oma concepts mamwe besides just taking risk for the sake of it. They say, try zaramba. This is it. So we have this project, doesn't give us 20,000. Rather, inotipa a loss in the tune of $209.27. If you're going to ask me if this is a good business, I'll tell you, don't ever invest in this business. If I use the internal, the net value is my decision. Right, Lonesome, talk to me. Lonesome, talk to me. Do you want to say something? Yes, yes. All right. Are you with me now? Excellent. Thank you. All right. So this is net present value. Before I give you a chance to so we still have some 45 minutes. Like I did yesterday. Muchandi appreciate pamuchaona assignment nasmanheru pamumwenda papota muchiona assignment equibooks. You appreciate why ndaka kupusha it that much yesterday, and you forgive me definitely. And vangavasiri mu lecture ine zuro. Phone number yangu muchaitsvaga ndozisiya. Right, excellent. I'm gonna close this one. Let's interrogate another project. So I've got a grocery business. This time I invest 50,000. Same business that we invest 50,000, but taudzwa kuti grocery chakwakanakira munowana 70,000 yenyu. This, if I add these three numbers, 29,000 plus 23,000 plus 18,000, it will give you 70,000. In other words, we are getting the same profit. So mumaziso emunhu ukawana business rate transport riri kutipa 70,000 sales minus cost of sale ye 50,000, so you get 20,000. You arrive at a decision yekuti ndichawana 50,000 in profit. At the same time, this one, this one is also giving you a profit. My sales is 70,000 with a cost of sale. You have invested 50,000 and get 70,000, so you are going to get an accounting profit here 20,000. But we want to find out if these two projects are the same. if these two projects are the same, and using the same discount factor, So to do that, we are going to put the same formula. The same formula equals NPV C20